This video is not for new traders. This video is for the people that stayed and that continue to stay. This here is Bitcoin's long-term price chart. And interestingly enough, the bottoms of every bear market tend to align quite nice. Currently, if we were to enter a full-blown bear market, we could easily fall another 40, potentially 45% from here, down to 50k. Now, what are those circles shown over here? Those points in time align with this chart. Now, this chart shows the search interest for Bitcoin over time. So there are those little spikes over here. We've got April of 2013. This year is April of 2013. We've got December of 2013. And here is December of 2013. You see what's going on here? It looks like search interest for Bitcoin very much aligns with price tops. So December of 2017, that's this point over here. In other words, there is positive correlation between the attention on crypto and its price development. As more people search for Bitcoin, the price of Bitcoin tends to go up. But what is also interesting is that we saw the all-time high in December of 2017. The subsequent peaks in Google search interest for Bitcoin, they did lead to new price peaks, but the search interest on the macro did not grow. It tends to rather decline. And so particularly this data point, right, December of 2017. It's interesting because many things changed that month. This is now Bitcoin's price relative to the Nasdaq 100. So we don't just look at the US dollar price, we look at the price relative to technology stocks, because very often Bitcoin and tech stocks move in the same direction. There's very high correlation. And interestingly enough, since December of 2017, Bitcoin barely outperformed technology stocks. Prior, from cycle top to cycle top, we did still have a lot of growth for Bitcoin relative to tech stocks. This is an outperformance of almost 800%. Over here, that's an outperformance of 400%. But since the attention on the asset long-term isn't growing anymore, it's very hard for Bitcoin to outperform similarly risky asset classes. So it's very interesting. It seems like the performance from 20k to our current prices is not because there's so much more interest in Bitcoin. It seems to be general capital market developments, as in risk on assets went up, and so whoever invested in Bitcoin also tended to allocate more. But it was not like there was more and more growth of new holders. Check this out. This is the percent of Bitcoin that's held by the short-term holders. It tends to go up during bull markets. In other words, the long-term holders are selling to the short-term holders. That was true in 2017. That was also true in 2021. And to a degree, it's also true for the last 2 years. The accumulation by the short-term holders had been less quick, but so has been, relatively speaking, this rally. The rally was also not as pronounced. We can also flip this chart and look at the long-term holders. Again, the long-term holders sell into rallies, and this time is no different, just that they sell a bit slower because the bull market led to much more muted price appreciation. Again, an appreciation that pretty much is typical for risk-on assets. Bitcoin did not outperform tech stocks. Something else happened in December of 2017. The number of active addresses for Bitcoin peaked. So we had very constant growth, a lot of excitement that Bitcoin might become the new money, that Bitcoin might get used as a new form of payment. But then from December 2017 to today, there's really no additional adoption in terms of active addresses. The price only appreciated as an investment asset. Thus, it also was not able to outperform. What's fascinating is that the move from 16k, so after the FTX collapse, to our current prices was not due to more attention on crypto. Attention by the retail investor actually went down during that time, and it's currently at all-time lows. Have a look at the following YouTube statistics. So here's Coin Bureau, one of the largest crypto channels. It has seen a new low in its monthly views. It used to be at 5.5 million views per month. Now it's at 1.3 million. Check out Altcoin Daily, another large channel. It peaked at 7.4 million and now has 2.8 million views. Also with the tendency to rather decline. That's already over the last 2 years. Here's Crypto Banter. That's very rapidly declining from 4.9 million to only 800,000 in December of last year. And we can even go to more niche technical content. Here, this is Deb University learning how to code for the blockchain. So that's for developers. The interest in technical development for blockchain companies fell even more drastically, from 700,000 views down to 51,000 views. And so this is a typical trend we see for crypto channels across all of social media, not just YouTube, but also Twitter, for example. There are some YouTube channels though that are not shrinking. The YouTube channels that tend to be a bit more realistic. For example, over here, this is Ben Cohen's channel that has actually grown last year. The last 2 months haven't been that great, but in general, the long-term trend is okay. I very much do like his content, by the way. Feel free to check him out in case you don't know Ben Cohen yet. On the other side, there are the hype channels that promise 100 or 1000x returns. For example, here, Crypto Gains, still selling the potential 1000x. Those channels are shrinking because the audience has already lost everything with those pump and dump schemes. So really, it's risk management, it's realism that survives. Here's my channel, by the way. I did have stronger times as well, but the very long-term trend is still acceptable. By the way, Ben Cohen also made a quite good video on that topic. He called it Crypto Ghost Town. This is the number of views aggregated for various YouTube channels. So that was 3 million views per day in the peak. That's now down to only 500,000 views. The number of new subscribers even went negative. So the average crypto channel is currently losing subscribers. And so this is interesting, right? There is very few people entering the space, yet the price of Bitcoin went from 16K up to our current levels. And how is all of this possible? The purchases came from Wall Street. The purchases came from the ETFs, but also from the treasury companies. And so this continuous stacking helps, of course, mainly Bitcoin and Ethereum. Here is the number of Bitcoin that's held by the ETFs. Unfortunately, there hasn't been that much growth over the last 3 to 4 months, and that might partially explain the lackluster price development. But then on top of that, we've also got the treasury companies, led of course by Michael Saylor's strategy. Those treasury companies also continue to accumulate. And it's those two entities that have helped Bitcoin's price rally. It was not the retail investor that was picking up the slack after the FTX collapse. It was MicroStrategy's Michael Saylor and BlackRock's Larry Fink. What I also find fascinating about this long-term relative valuation chart, Bitcoin relative to the Nasdaq 100, is not just that the outperformance has come down quite a lot. It's also that during that time, we actually have seen more long-term holders holding Bitcoin. So the amount of Bitcoin that's held by long-term holders moved from 40% to roughly 60%. In other words, Bitcoin does get more adopted as an investment vehicle. Still, the outperformance isn't yet there. We have seen peak long-term holder allocation when Bitcoin was close to 40K. And we want to buy whenever we are very high in the long-term holder ownership, and we want to rather sell when we are low. And so according to that chart, we should be selling into this rally. Because Wall Street continues to accumulate, especially Bitcoin and Ethereum, I expect the Bitcoin dominance to continue to go up. The purchases really have accelerated since beginning of 2024. And so the Bitcoin dominance continues to rise. Potentially, right, when we look at Bitcoin's dominance plus Ethereum's dominance, and we take away the capital rotation from BTC into ETH, from ETH into BTC, while we are already above the combined long-term dominance, I don't really see the case for an altcoin rally right now. I do not know where the demand should be coming from. Usually this happened when Bitcoin plus Ethereum had a dominance of roughly 82%. Currently, we are at 72%. Who is supposed to buy the altcoins? It's not going to be Wall Street, and the retail investor over time is getting less and less interested in crypto. And so congratulations to you. It's the people that stay around during tough times that are then able to take advantage of the next bull market the most. If you got some value out of this video, feel free to give this a like. It will help the channel grow. Feel free to also check out the premium membership. This is where I personally share my trades, where I share how I navigate those markets. The link to premium pops up here on the screen. Thanks for watching, and see you next time in YouTube on premium. Cheers.